Hey guys, welcome back. Hope you all are doing well. In this video, we will continue with the ratio analysis. Today, in this video, we will discuss liquidity ratio. So, whenever we talk about liquidity ratio, the major ratios under liquidity ratio are net working capital ratio, cash ratio, quick ratio, which is also called asset test ratio, and current ratio. So these are the major ratios which generally comes under liquidity ratio. So today, with the help of some cases, we will understand these particular ratios, and I'll give you some examples so you can also practice and you can also solve the numericals based on liquidity ratio. Okay. So in our previous video, we generally talk about the introduction of ratio analysis. What is ratio analysis and what is the implications and what is the uses and need of ratio analysis? What are the basic objective we generally achieve through ratio analysis? Now we will discuss the technical part of or the technicality of ratio analysis. And as I told you, we have number of ratios. Today we will start with the liquidity ratio. In next video we'll talk about solvency, then we'll discuss activity, profitability, and market prospect ratio. And what all these are ratios we already discussed in the introduction part. So that video is generally based on the fundamental of ratio analysis, the importance, need, objective, and all. And now we'll come to the technicality of these particular ratios. Okay. So we will start with the liquidity ratio, and the first one and the most important. Okay. And the only request to all of you guys, please do like and do share this session with your friends so other can also take the benefit of these particular session. And if you are new to my channel, please do subscribe. Okay. So first thing we have on a screen, that is what is liquidity ratio. Okay. So as I earlier told you in our introduction part, we I already introduced this particular one. So liquidity ratio, these are the ratios which generally help you to identify the ability of a company to meet its debt obligation by using current asset. Okay. So whenever we talk about the current asset, it include cash, cash equivalent, short term investments, or account receivables. So these are generally part of your current assets. Okay. Liquidity ratio, by using these particular ratios, you will be able to identify your company's ability to meet its debt obligation, or we can say short term debt obligations. Okay. So how liquid, like how much liquid asset you have in your organization, or how efficiently you can convert these particular asset into cash, and how you can meet your short term debt obligations. So that is generally part of your liquidity asset. So here we have number of ratios, like we have current ratio, we have asset test ratio, we have quick ratio, net working capital ratio. So these are some major ratios which generally comes under liquidity ratio. So we will start one by one with defined cases as well. So we will solve some problems, so it will give you better understanding toward these particular ratios. Okay. So liquidity ratio are helpful in determining the ability of a company to meet its debt obligation, basically short term debt obligation, by using current asset. Okay. So current asset will generally include the cash, payment receivables, or equivalent to cash or marketable securities. So these are generally part of your current asset. Okay. So they are divided or classified under different ratios. So we have current ratio, we have cash ratio, quick ratio, and net working capital ratio. So these are four most important or major ratios which generally comes under liquidity ratio. Okay. So we will start with current ratio. So first one is current ratio under liquidity ratio. Okay. So a current ratio shows the financial capacity of a company to clear off the current obligation by using current asset. So there is one thing, guys, you need to know first. Like the formula is current asset divided by current liabilities. Now, what are current assets? So, what are current assets and what are current liabilities? So, you need to know about these particular things, because if you'll have a clarity, so you will be able to make right entries, or to pick right entry. So, current asset which generally include cash plus cash equivalent, cash equivalents, short term investments, or it also include account receivables. Okay, and it also include prepaid expenses. Okay, so these are generally part of your current assets. So these are the major head under current asset. If you talk about the current liabilities, I'll mention here. Okay, so current liabilities, under this particular one, we have payables. Okay, payable, and we have payroll dues, which include salaries and other things. Okay, we have payroll taxes, which again part of this one. Okay, we have income tax, again part of this one, income taxes, and we have interest, major head as interest also, interest payable basically. Okay, and we have utility expenses. I hope you're getting my handwriting. Okay. Apart from that, we have like rent and others. Okay. So, whenever you talk about current ratio, it is a financial capacity of a company to clear off or to pay off the current obligation. Like if you are running some organizations, so you have some expenses which is these are kind of monthly expenses. Okay, like payroll, payables. Okay, any payables including payroll dues, salaries and all, and payroll taxes, income tax, interest payment, rent payment, utility expenses. So these are generally part of your current liabilities, and to meet these particular liabilities, or to pay off these particular liabilities, you have some assets in your organizations, like these are cash equivalent or marketable securities, short term investment, account receivables, prepaid expenses, which prepaid expenses for rent or for any other thing. Okay, so these are generally part of this one. So if you divide current asset, this divide by current liabilities, so outcome is your that ratio is generally known as current ratio. I hope you guys are clearly getting this particular thing. Okay, so I'll give a case. So on the basis of this particular case, you will be able to make your understanding towards the current ratio. So you just need to remember this formula. So this is very simple one: current asset divided by current liabilities. Okay, so here we have two cases. One is company X and another one is company Y. Okay, so company X, like cash 80,000. Then we have sundry debtors 1,20,000. We have stock in trade 3,60,000. Prepaid expenses 40,000. So total current asset, if you add all these, so your total current asset is 6 lakh rupees, and for this company it is 8 lakh rupees. Okay, and current liabilities on this company X is 2 lakh rupees, and company Y is 4 lakh rupees. So now the formula is like you have this formula: current asset, which is 6 lakh rupees, current asset which is 6 lakh rupees. So 6 lakh divided by 2 lakh. So 6 lakh divided by 2 lakh. So your outcome is 3.1. The ratio is 3.1. 3 is your outcome. So the ratio is 3.1 in case of company X. Similarly, for company Y, it is like 8 lakh divided by 4 lakh, which is 2.1. So this is the current ratio in case of company X and Y. So very simple. The only thing you need to know, you need you need a basic understanding towards the current assets and current liabilities. So when you pick that particular thing from your balance sheet, so you have to be very careful. Okay, so if you know that particular thing, if you remember these particular things, you will be able to answer these questions. So current asset is like these are the, this is the list, these are the major items under current asset, or current liabilities, these are the current liabilities. Okay, so this way you can understand. Now the implication is, if current asset is equal, more than equal to 1, so this is a positive side, but if it is less than equal to 1, it's a negative side. Okay, so if any company's current asset is less than 1 or lower than 1, it is means the company's it generally represent company's financial performance are poor. Okay, so like whenever we consider these particular things, like whenever you use these ratios for investment purpose or for your business operation purpose, so you need to take care about these things. So higher the current ratio, which is the positive side for that particular company, because they have more amount in their hand to meet with their current liabilities. Okay, so this means one's liability to pay off the present time monetary obligation with their assets. So if you talk about the current asset, it measured by the dividing current asset, or we already gone through this particular one. I hope you get this particular thing clearly. So simple one. So you have to, like whenever you practice these particular things, you can take some cases, just you can make some entries on the basis of these particular entries, or like if you can pick any balance sheet or profit and loss account of any company, then you can solve that particular one. In examination as well, they'll give you some entries, like sometimes they'll give you direct question. So the total current asset of a company is this amount, and the total liabilities is this. So what is the current ratio for that particular company? So I hope you're getting this one. Or sometimes they make that particular question complex. So they'll give you multiple entries like rent receivable, rent payable, or salary payable, or taxes dues, and then you have to calculate the current ratio on given on these given data. So, okay, so if you still have some cases, please do mention in comment section. I'll try to solve your queries. Okay, and one more thing, guys, I'll come with the MCQ session based on ratio analysis. So where we'll discuss number of questions based on current ratio or the other ratios as well. Okay, let's move to the next question. Next ratio. So next ratio under liquidity ratio is cash ratio or cash equivalent ratio. Cash and equivalent ratio. Okay. So cash, you understand what is cash. Now equivalent, which we can easily convert into cash, like marketable securities. Okay. So which can be converted into cash or at a in a very short time duration. So that is equivalent. Okay. So cash or equivalent ratio measure a company's most liquid asset, like cash and equivalent to the entire current liabilities of the concerned company. So now you know the liabilities, current liabilities. So what are the current liabilities? You understand that particular one. Okay. So now this is like in previous ratio, we calculate the current assets divided by current liabilities. Now this is cash or equivalent, or like the most liquid asset of that particular company. So liquid means cash, and equivalent, so which can be easily converted into cash. So that is equivalent or cash to equivalents or cash equivalents. Okay, so now it is measured by following formula. So cash ratio, the formula is cash and equivalent, cash, or you can say cash plus equivalent marketable securities and all, divide by current liabilities. Current liabilities, you know, like payroll dues, salaries, rent, or any other utility expenses. So these all are the part of your current liabilities. Okay, so on the basis of this, we'll solve a case, so it will give you more clarity. Okay, so cash, let's say there is a case, there is a company, there is a XYZ company. So here you can see the cash is 50,000, and cash equivalent is 20,000. So this plus this is 70,000. Okay, and the current liabilities are 1 lakh. So in this case, current liabilities are 1 lakh. So 70 divided by 1 lakh, which is equal to 0.07. So 70 divided by 1 lakh equal to 0.70. So this is the case of your cash or equivalent ratio. Okay, so cash equivalent ratio, cash plus equivalent divided by total current liabilities. So that is by using this formula you can calculate cash or equivalent form ratio. So this is very simple, guys. Like most of time I heard like when I teach students, they generally have a fear about ratio analysis. This is just a number game. You just need to remember the formulas and you just need to pick right entries from your sheet. Okay, so if you have a clarity about equivalent asset, cash equivalent, or if you have a clarity about the current assets, current liabilities, so you need to remember this formula. If you remember the formula, you can easily calculate these particular figures. Okay, let's move to the next one. Quick ratio or asset test ratio. So this is so many times examiner asked this question. Okay, so this is one of the most favorite ratio analysis, which is so many time examiner, they interviewer, they also ask this particular question, or in examination as well. So they ask question based on asset test ratio, that is also known as quick ratio. So it is another liquidity ratio that determine company's current available liquidity. So it is easily, like whenever we talk about the liquidity, so it means assets which can easily converted into cash. So this is the basic meaning of this term liquidity. Okay, so it include cash and marketable securities and same. Okay, so quick ratio equal to quick asset divided by quick liabilities. Okay, so quick asset I already gave you that name, and quick liabilities I already gave you the name. So this is a very simple one. So quick, here I'll further explain this one. So quick asset, so what comes under quick asset? So all current asset plus minus stock. Inventories are not part of this one. Please do remember this one. Okay, so we cannot convert inventories into cash, because like we can, but it is not fixed. Okay, so that's why they are not part of your current asset. Prepaid expenses is also minus from this one. Okay, and liabilities are current liabilities, all current liabilities minus bank overdraft and cash credit. So if you know these particular things, you can easily answer the question. Okay, so I'll give you one case. So here we have a case of let's say XYZ company. So cash and equivalent is 50,000, short term investment 10,000. Short term investment, which is basically like let's say if that company invested in some shares, so they can easily convert that particular one into cash. Okay, so that is short term investment. Okay, receivables, so they have a 2,000 rupees receivable from XYZ person or XYZ company. So again, that is part of your current asset. Inventories, as I earlier told you, so inventories are not part of your current asset. Please do remember this one. Okay, so inventories are not part of your current asset, so it will be minus from your this entries. Other current assets, so 8,900. So this plus this plus this plus this. So the total amount is 75,918 rupees. And current liabilities after adding the payroll payables or the salaries or the payroll taxes, income taxes, utility expenses, or any other expenses or any other current expenses of that particular company, the total amount is 36,450 rupees. So now you can easily calculate asset test ratio. So it is a quick asset. So your quick asset are 75,918 divided by current liabilities, which is 36,450 rupees. So your outcome in this case is 1.86. So this is your quick ratio or asset test ratio for this given case. Okay, so here you can see this example as well. So they have included the Excel sheet. So as per B5 is cash and equivalent, B6 is short term investment, B7 is receivable, B9, so they minus B8 because it is inventory, so it is not part of your short term assets. Okay, current asset. So B9 other current assets. So these plus these all, after adding all these, divide by B11, that is your total liability. So the outcome is this quick ratio for the given company. I hope you guys getting these particular things. The only funda is to solve these ratios. Two things that is very important. One is you need a basic understanding towards these particular entries. Okay, so like as I gave you earlier, like examiner, they can ask you question based on, like they can ask simple question. This is the current asset and this is the current liabilities. Calculate quick ratio or asset test ratio. So your journey become very simple. But they can also ask, they can give you a case. So cash equivalent this. After, like, you have to calculate the current you have to calculate the quick ratio from the given case. So now here, or even more entries that can make that particular case complex. So you need a basic understanding toward these particular entries. And second thing is you need to remember this formula. So if you remember formula, you can easily calculate that particular number. Okay, so first you can make a list of these particular formulas, and if you have a basic understanding, then you can solve multiple question. And if you stuck with any cases, you can send it to me. So I created a Telegram channel as well. So that is GIB Prep by Mahesa. So if you'll follow that particular one, you can find that particular Telegram channel in Telegram group in description. Okay, so you can join that particular and you can send me your cases or you can ask your queries. Okay, so next one is net working capital ratio. This is a very simple one. Current asset divided by minus current liabilities. Okay, so it is used to determine whether a company has a sufficient cash or fund to continue its operation or not. So net working capital. So working capital is something related to your operations. Okay, so with the help of net working capital ratio, you will know like that particular company have the enough amount in their hand to run that particular business or business operation. Okay, so it is measured by current asset minus current liabilities. This is very simple one. Okay, so we will discuss this one with the help of case. So here the only thing is, like, first thing you need to remember formula. Formula is very easy in this particular case. Now the second thing is you need a clarity about these particular entries. So if you have a clear vision about like cash, account receivable, inventories, so these are the part of this one. So this there is a so it is not a quick asset test ratio, so that's why they included inventories. Okay, and current liabilities in that particular organization, these. So if you talk about 80,000 minus 40,000, so 40,000 is your working capital in this particular case. I hope you get this particular thing clearly. So net working capital is the capital which is required to run the day-to-day operation of any business. Okay, so in this particular case, they have 40,000 in their hand to run the business. Now they can calculate, let's say, if the monthly expense of that particular organization is 10,000, so they can easily run their business till 4 months with this particular money. Okay, so they have 4 months to run out from capital. Okay, so working capital. So they have enough money. They have 4 months money, so they can make plan accordingly and they can work on their revenue, so they can increase this particular one. Okay, so out of if you talk about the liquidity ratio, these three are the most important. So many time examiner they generally ask question based on these one. So these are generally part of liquidity ratio. So liquidity ratios. So first one is current ratio, current asset divided by current liabilities. Only thing, the formula is very simple. You need to know what are the current assets and what are the current liabilities, and you can easily solve that particular one. Quick ratio, current asset minus inventories divided by current liabilities. So here we generally minus inventory in this particular case. And cash ratio, cash plus equivalent plus short-term investment divided by current liabilities. So with the help of these particular one, you can easily calculate the given cases as well. Okay, so in next video we will discuss solvency ratio. So solvency, that is something a company's ability to meet its long-term debt. So it is something related to long-term fate of that any company. Okay, so a company's tend to meet its long-term debt requirements. So that is something related to solvency. So we have debt ratio, we have equity ratio or debt to equity ratio or interest coverage ratio, which generally comes under solvency ratio. So we will in next video we will discuss all these, and with the help of some cases, so you can easily understand these particular ratios as well. Okay, so guys, I hope you enjoy the video. So if you like, please do share with your friends so they can also take benefit of these particular one. And in the description, I'll share my Telegram group name or group link, so you can join that particular one. And if you have, let's say, when you plan your study, when you are studying these particular thing, if you face any problem, so you can send me screenshot on that particular group, or even like if you need a PDF for any classes, so you can mention, so I'll pass on those particular one. Okay, the only request is please do like and do share this session, and if you are new to my channel, please do subscribe. And sharing is caring. So if your friends are preparing for JIB, CIB, or RBI grade B or any other government examination, so please do share this channel link with these particular friends, so they can also subscribe and they can also watch these particular videos. Okay, so this is it from my side. I'll see you in next video, where we will discuss solvency ratio and ratios which generally comes under solvency. So till that time, bye bye, take care all, have a nice day, thank you.